Good afternoon. My name is Dorothy White, and I'm so glad to be with you here today. This is Community Focus on Channel 6, and with me here today I have Miss Martha Nest.
Hi.
Hi there. And we have been friends for a long time.
Yes, we have.
Goes back a long time,
have.
and I know I value very much the information that you've shared in the past, and a lot of new information coming out again.
A lot of new information.
A lot of new information. So if you could just pick maybe one thing that you feel the folks would really appreciate knowing about some of the changes that are going on, if you could share that with us today, I'd appreciate it.
Okay, I'd be glad to. The first thing I want to discuss is the fact that everything has changed on the federal level when you file your income tax return, and everything has changed on the Kentucky level, and they don't match.
Oh my.
So
that sounds like it could be a problem right there.
It can be if you are a little bit more diligent than in the past on how you answer questions, especially if you file your own tax return. Everybody knows that the federal government instituted new tax laws effective January 1st, and they changed the standard deductions. And if you're single, the standard deduction is now $12,000, and if you're married, it's $24,000. But they also took away personal exemptions. So when you look at the whole package, you can't really expect to get a refund that is thousands of dollars more than you got last year.
Which is what they would like you to believe.
Yes, that is true. The other thing they've done is if you have children, they have increased the credits that you get for bringing up a child to age 17. Of course, we all know after 17, the expenses go sky high and you don't get the credit. But that's probably the most important thing to realize.
Okay.
And they also have changed itemized deductions for people that own homes, pay property taxes, have state income taxes taken out of their pay. They have changed the limits on those so that most of your state income tax and property taxes, those figures will be capped at $10,000. But here in Kentucky, our property taxes are fairly low.
Right, they are, comparatively.
Compared to other states. So most of you here in Kentucky will still be deducting all your state income tax and property taxes. Your mortgage interest is still deductible. However, all the little things you used to deduct outside of charity, such as my employer makes me run errands and I don't get reimbursed, I have union dues, I pay someone to do my tax return, all of those deductions have been eliminated. So when you go to file your return, you will also notice that the forms have changed. And everything is now on half a page.
I saw that.
To make you think that you're filing a postcard, there is no postcard. It is still on paper, and all of the additions and subtractions that used to be on the second page of your return are now on Schedules 1 through 6.
Okay, so you are filling out this form.
You are filling out the front.
Okay.
However, you also have to go to all of the schedules on the back that were added on. You used to just flip this over.
Right.
Or you had some deductions down here for the teachers and things. All of those are now on separate pieces of paper.
And this insinuates that it's gotten a lot easier.
It is not
When I
gotten
see
easier.
this,
No.
it tells me things are going to be easier.
We've been taught as a tax preparer, I've been going to school for a year to learn how to do all this new stuff and to understand all of this.
Truly.
And they're telling us that except for putting your name at the top, you do the return backwards. You go answer the questions on the schedules, and then you go to the front.
So this is pretty much like a cover sheet.
That is a cover sheet.
Okay.
So
Well, that explains a lot, though.
if you are a wage earner and you don't own a home and you're renting, which is not deductible anyway, and you have a couple of kids, you probably can do your tax return yourself this year. However, if you have anything out of the ordinary, this is not the year to save $150.
Is that a normal charge then for
Beginning
taxes?
charge around this area normally starts at around $150. There are preparers that do it for less. There are preparers that charge a lot more. Most of them will tell you what their base rate is, and then they'll tell you that if you have anything out of the ordinary, it will be more money.
Right, because more time.
And more time. So you have to understand that.
Sure.
Some of the things that they saved were the $250 deduction that teachers are allowed to take for the supplies that they buy that they're not reimbursed for.
That they probably spend that in a month.
Yes. And the balance that used to be deductible on their itemized deductions is gone. So they're only going to get the first $250.
Okay, so they've capped that.
They've capped that. And a lot of people think that if you do not have adequate health insurance or don't have it, that the penalty for not having insurance has gone away in 18. It has not.
It has not.
It
Okay.
has gone away for January 1st of 19 forward.
Okay.
So this year, if you don't have health insurance, unfortunately, you're going to have to calculate the penalty. If you have no health insurance in 19, when you file in 20, there will be no penalty.
Okay.
And they're hoping to change all of that before December 31st, but I'm not going to make any comments on that.
Whether or
And-
not that will happen.
Right, and student loan interest is still deductible.
Okay.
And if you have a 529 plan for your child or grandchild, and they are attending a private high school, you now can make withdrawals tax-free from that plan to pay for that secondary education if you feel you may not need it for college. And that's individual. That depends on personal circumstances.
But I know a lot of folks have said that it's worth sending your child to a school like that because the education that they get is of hopefully a higher level and a lot more apt to be getting some monies to help them with college.
Correct.
I know one of the schools that one of my grandkids are going to, they said like 90% of the kids from that high school receive a generous amount of aid because of the grade level that they're required to keep.
So that is something to look at if they have a Section 529 college savings plan, because it may enable the family to pay that bill without borrowing the money.
Now, are they able to take any deductions during the year for those expenses? If they're no. Okay, this is
there
kind
are
of
no
like they're
deductions,
hoping to get that
but it's
result.
like coming out of your Roth IRA. It's
Right.
not taxable if you take the money out of that account to pay for tuition. You cannot use it to buy their computer. It's only for tuition.
For tuition.
Okay.
Okay.
If you are in business,
And we have a lot of small business owners here in Nelson County.
Things have changed a lot.
Oh my.
First of all, if you are a full-fledged, what we call a C corporation, and if you are, you know you are.
Right,
Yes. And though that tax rate has gone down from 35% to 21%.
wow.
And that's
a significant amount.
That is a permanent change. All of the things that I just talked about on the personal return are temporary until 2025, unless Congress changes that. So for the next 7 years, supposedly things won't change. The only thing I can pretty much guarantee is they aren't going to change for 19 because the government's closed and they're not really addressing tax situations right now. They have a lot more.
They have
difficult
other things they're thinking about.
Right.
So.
However, if you're an S Corp, a partnership, or you're a self-employed sole proprietor, there is a tax deduction now for 20% of your net profit, which is your income less all your expenses, will not be taxed. So, for example, if you made $10,000,
Okay.
you would get $2,000 of that, 20%, tax-free. And that amount of money, that $2,000, would be applied to your other income to reduce your tax burden.
Okay.
However, it does not apply to your Social Security and Medicare tax that's due on self-employment income, and the state of Kentucky is not going to allow it.
Now, that's what I was going to say. Are we still talking federal?
We are still talking federal.
Okay,
We're going to talk
so-
state in a minute.
Okay.
Okay? And the other thing that is going to happen with that deduction is if for some reason your tax bill after your partner's wages were put in and all of the credits for the children, if your final tax bill is less than that $2,000, you will only get to take your tax bill down to zero. They're not going to give you the rest of the money back in a refund.
No credits?
No credits. Doesn't work like earned income tax credit. No credits.
Okay.
Okay? And the other thing that's happening on the business end is if you buy equipment, you can now write off in 100% of the cost if you wish to.
100%?
100%. So if you buy a
Computer.
computer for $2,500 and you use it exclusively in your business, which everybody does if they're in business,
Right.
you would be able to expense that all in 18 if you wish to. If you wish to use the depreciation schedules, which I'm not going to get into in half an hour because we'd be here till 10 tonight, you can use the depreciation schedules or you can expense it.
Okay.
It's a bonus. So basically you can look at your tax burden and say, well, if I deduct the whole $2,500, where does that put me? And if it saves
So
you
it may
money,
be worth it.
it may be worth it to do it. When you get into big equipment that costs $150,000 like a dump truck, unless you're making a lot of money that is going to be taxable, most people would not use that. It's really designed,
Depreciation.
that bonus is really designed for small business owners like me who pay $1,500 for a tax program that now I can expense. Okay?
And you can expense 100%.
100%
100% of that.
every
You just
year.
don't hear that very often. Usually it's a percentage.
No, it is.
It's
It
a
is.
percentage of it, very seldom.
Right.
Let me just ask you another
Sure.
question here, only because a lot of people will ask me things that, in fact, when I told them I was going to speak with you today, they said, oh, ask her when, obviously I've worked for a lot of nonprofits, and
Yes.
with the nonprofits, folks are always interested in how much, if they do, decide to donate something, whether it be equipment. We did a lot of equipment trades with people, and that way we could afford to do things on a nonprofit basis
Right.
and have the best equipment that we were able to
Right.
afford. So when you're finished with that equipment and then you want to donate it to a charity or to a nonprofit, is there any deduction in the tax system for that?
Yes. What would happen is if you're donating the equipment, it's you just put it on your tax return as a charitable donation.
Okay.
But the issue is that this is where the problem comes in. You've expensed it.
Right.
So therefore it is worth nothing on paper.
Okay.
Therefore, there's no deduction for giving it away. Because you
Okay.
expensed it and you already took all your benefit ahead of time.
Okay, but if I had not expensed it.
So if you depreciated
Yes.
it and they gave it to you and it was a $5,000 computer and you used it for 3 years and now it's worth $2,000 used and you donated it to another nonprofit, nonprofit to nonprofit,
Right.
you would be able to deduct the remaining $2,000 as a charitable donation.
Okay, and that would have to be to another company, not an individual, or it could be to an
No,
individual?
it could be to an individual. Charitable donations from a company to an individual are allowed.
Okay, okay.
I
Well,
mean, I'm a small business. I give money to other nonprofits. I'm a for-profit company most of the time.
Well, we hope so.
Yes,
we try anyway.
But I also will give money on occasion to an individual that their need, the fund that we're funding to take care of their needs has been set up as a nonprofit. Therefore, you can take the deduction. But if I feel sorry for my friend who's in the hospital paying her copay and I give her $500 and there's not a fund, that is not a deduction. That's a gift.
That's a gift, okay.
She doesn't report it and I don't deduct it.
Deduct it. That's why I wondered if there were a special form or something.
There is no special
there is no
form
special- it's
except
just
on the back where it says
charitable.
charitable deductions.
Okay, I just wondered because we actually got into a situation where there were a group of us who wanted to help support someone that was in the group that was having a lot of difficulty with hospital expenses, because that's something we talked about
Right.
for just a few minutes.
Right.
Only, and we don't want to get into that too much because it is a huge subject
It's a huge
on its
subject.
own, and the insurance is so expensive, and how much actual cost is covered by that insurance, and what's left, and what position that puts the family in, because this particular family is in a very hard way because of it.
I would recommend that you might want to, if it's going to be the long-term problem,
It is going to be long-term.
then I would suggest that you might spend a couple $100 or $300 and use the expedited easy form to set up a nonprofit for them. Because GoFundMe money is not a charitable deduction.
Okay.
So if you put money in a GoFundMe account, that's very nice.
But not deductible.
It is not deductible. If you give it, like for example, let's use an animal.
Okay.
We'll make this
I'm just going to
generic.
jot that down so I can tell my friend
Right,
that
okay,
is what you're
so-
saying there.
If you want to help your friend
Uh-huh.
get their dog spayed because they don't want to have babies and they can't afford it, don't go to the vet and pay for the operation. Take them up to the Humane Society,
Okay.
pay their full price, which is right now $40, but when you write the check to the Humane Society, it's a charitable deduction.
I did not know that. I did not know that.
Because the Humane Society of Nelson County is a nonprofit 501c3 organization.
Okay.
If you want to help someone in a small business, maybe you want to go to the chamber and buy them chamber dollars.
Uh-huh. Right.
Now, as an individual, you can't deduct expenses to the chamber, but as a small business person, I can deduct things that I pay for at the Chamber of Commerce.
Right,
So
right.
you have, so I can take the deduction off for buying them, giving them bucks to go buy clothes. Okay? That they might need, by giving them chamber dollars, and you can go up to the Humane Society and have the dog taken care of or the cat taken care of, and that's a charitable deduction. Now, that sounds a little callous, But if you've got someone that's really in trouble, you have to look at all avenues of how you can help them.
Yes, that really is kind of the situation that we're in.
And if they have real complicated tax situations because of that, they really should ask for help from an experienced tax preparer. I do a percentage of returns every year for free. Most everybody, I mean, a big chain like H&R Block may not, but I don't think that there is a preparer that's in business for themselves in this county that is not willing to help people, especially if they know the circumstances.
Right, right.
Okay?
I think that's what makes the biggest difference is a charitable organization or a church, if it's a Christian charity or that thing, is there a difference with that?
No, you can give money to the church and they can dispense it, and then it is a charitable deduction.
Okay.
All contributions to all churches that are bona fide churches are tax deductible.
Do they have to send a particular form or something
No,
for that?
a church will send you a form if you gave over $250, where all nonprofits are required by law to send you a letter or a runoff, or a lot of the churches will send you a record of all the tithes that you've given for the year and total it up. And anything over $250, they're required to do that.
Okay. All right.
Okay. But if you gave less than $250, your canceled check or whatever is perfectly acceptable.
So a canceled check would serve as a receipt.
Would serve as a
and
receipt.
if you had a record of that, then
Yes.
would that replace the sheet that they send you, or should you have both? Or
You should, if they send you the sheet, keep it.
keep it. Okay.
That's basically the rule.
Because I remember at the chamber, I did have people call me once in a while, like a small business owner would call, and they would say, I attended so many women's councils, so many of these meetings, ones that, they had paid for, and they want a receipt to include with their taxes or to turn into their employer. Sometimes if it was a tax deductible thing, they could turn into their employer, and they would get reimbursed. And we were always glad to do that because anyone, obviously, if they're giving support to you, you want to support them and make that possible for them.
Those are the things that most of the nonprofits are more than willing to do.
Yeah. Oh, yeah.
Okay.
Okay.
Now, I'm going to talk about Kentucky just briefly to tell you what is not going to be allowed in Kentucky. And one thing that everybody needs to know is that the Kentucky legislature changed the tax rate, and it is a flat tax of 5% on your net earnings after your deductions.
Okay.
So
just cross the board, 5%.
Across the board. If you made $10,000, for every $10,000 of net income, you're going to pay $500.
Okay.
5%.
And we are talking about the Kentucky income tax changes for 2018.
Right.
If sometimes someone will tell me that they said, well, I caught you in the middle of a conversation. I didn't really understand some of the things, and that's why I like to kind of hold up things and so that people can actually see.
Kentucky 740 there.
Okay.
Because I gave you one, and if you don't, here's another one.
Okay. Let's take this one.
Yeah, that's okay.
Okay. So this is our Kentucky form.
And that one looks roughly the same.
Okay.
The only thing they did was on the Schedule A, where you took your itemized deductions, they got rid of most of them. And so that's only now half a page long. And that's what we're going to talk about.
Okay.
One thing they did do is if you have a pension, including teachers' pensions, police, firemen, city employees, state employees, everybody that's been picketing, they have decreased the exclusion from 41,110 to 31,110. So if all you had was a pension and it was over $31,000, in 18 you're going to pay tax. in 17, you only paid tax if your pension was bigger than 41,000.
Okay.
That also includes federal pensions, military retirement, etc. Any pension income that comes on that form 1099-R.
Okay.
When you add it all up, you're going to pay more tax if you are lucky enough to have a fairly good pension. They took away the $10 personal tax credit, which I don't think is a real problem. But what they did take away that is a problem is all the deductions for health insurance that you pay.
Gosh. You have to have health insurance, but
All
you can't.
deductions for long-term care. If you're getting tobacco settlement payments, they're now taxable.
Oh my goodness.
You have stable investment income is now tax exempt. Most people don't have that. They did not take away home mortgage interest, and they did not take away charity. They took away all deductions for taxes. So your real estate taxes are no longer deductible in Kentucky. Your excise tax on your vehicles, your equipment, none of that is deductible anymore. And they left in some things that most people don't have, like unrecovered investment in an annuity and amortized premiums on taxable bonds. So we're not going to talk about that because most people don't have it.
Doesn't apply.
And the people that have that have highly experienced preparers because that's a very complicated segment of the tax law. They got rid of the 740EZ, which means your kids can't fill out a 3-line tax reform anymore. They return anymore. They've got to use the big form just like you.
No matter what age.
No matter what age.
If they start working at
Yes.
16, they still have to.
Yes.
Okay.
And they took away, as I said, the health insurance and the other deductions. So basically, the only other thing that is good on the individual side is they did change the tax brackets. So if you were making $100,000 last year and you were in the 28% bracket, this year you're going to be, if you're a single person, you're only going to be paying 24% tax instead of 28%. So that's a 4% savings. Most people are, unless they have children under the age of 17, are going to get roughly the same amount back as they did before if they got a refund. The problem is the withholding tables were changed and they were changed incorrectly.
Oh my.
So and they've fixed them twice, but there's no guarantee if you got more money in your take-home pay on the federal level, you may not have had enough tax taken out.
So that's usually the situation.
And you're going to have to look at that. Kentucky, when the new law went in to a flat 5%, they changed all the withholding tables. And you should be relatively okay in Kentucky unless you had large health insurance deductions or long-term care, or you had a disabled child that you were paying a lot of co-pays for. All of that's gone. That's going to cause people to have to pay more tax. But although Kentucky's tax is increasing, they made arrangements for it if you get a W-2. If you're self-employed and you didn't change your estimates, you're going to pay more tax. There's no...
It's just the way it is.
That's just the way it is.
And that's for individuals and businesses as well.
Yes, individuals and businesses in Kentucky. They did not agree with the bonus depreciation. that the federal government, where I said you could deduct
Right.
all of your $2,500 computer.
Right.
When you go to do your Kentucky return, you're going to have to put it all back, and then you're going to have to do regular depreciation, which is why I'm saying if you are in business and you're not really good at your record keeping or doing your tax return, I highly recommend this year you go see someone.
Go see someone. Well, my
Because
husband
it
usually
is
does.
going to change dramatically.
Well, my husband uses TurboTax, and
Hopefully.
when he pulls it up, it automatically shows him. It highlights everything that has changed.
That is correct.
For him to take a second
Look.
look at whether or not he's, and it's with state and with federal, and he, has always.
He should, if you understand how to answer the questions with TurboTax, and you're willing to take the time, and you realize that there's an extra fee to file that state return, so don't
Right.
forget to file it, because I have people that have come to me, I filed my tax return, and the state says I didn't. And I said, did you pay the extra money to TurboTax? No, it's $89. I said, no, it's not. It is not $89 if you want them to file your state return too.
Oh, okay.
You pay extra.
Yeah.
Okay. So if you understand the questions and you don't have really complicated issues, I mean, I have a client who likes to invest in publicly traded partnerships, and he sends me 35 or 40 K1s
Oh my.
that have to be put on his tax return. He should not be doing his own tax return.
No.
Okay, his investments are way beyond what TurboTax can handle in their. They're not equipped to enter all
Right,
that information.
right. It's not set up
isn't
that
what
way.
it's set up for.
No.
But if you're diligent and you take the time and you pay attention and understand the questions that they're asking you on all these changes,
Right.
you will probably be fine. I am not here to tell you to come to my office. I'm swamped already.
I'm going to say, I think you keep plenty busy.
I am swamped already, but there's nothing wrong with those programs if you understand the question. If you don't understand the question, either stop, call somebody, or call them, because they have people that will answer the questions.
They do.
And try and help you out. They also have a website, and you can Google blah, 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 blah.
Here's my question.
And TurboTax will be one of the ones that answers your question. And they will also answer it, I have seen it, where they will say, we think that, however, we also suggest you talk to a tax accountant.
expert.
That's when you have a situation that is beyond what those software programs are equipped to handle. Because every software program is different. I buy one that can handle, I think my return has 2,700 forms, my software, not my return.
So there shouldn't too many things come up that you can't handle.
Right.
Okay.
But TurboTax is not designed for that.
Oh, no. It's
Okay.
really pretty much individual.
Right. So you have to look at your own situation and see what's going to benefit you. And he also has to be willing to spend the 2 or 3 hours it takes to do it.
Well, he is retired.
Yes,
He is
and
retired.
a lot of people drop off returns to me, and I say, "Why are you coming to me?
Yeah.
You can do that. I'm not doing it.
Well,
I
a lot
don't
of
like
people,
the government."
See, he really, coming from an engineering background, he loves numbers.
Oh, he's like my brother.
He gets into these, and he's like, now wait a minute, it says that this form is this, but what about if we did that, and if we did this, and then,
Oh, they have what ifs.
I know. They do.
I have what
they
ifs
do.
in
They do.
mine.
They do. And it will say, well, you've done this in the past. You know, now why are you saying this amount if this is what you've done in the past? What changes have you made? What's happened that's caused these changes? And, you know, obviously if there's a legitimate reason, then you can, you know, justify it one way or the other. But I think it's just what you're comfortable with, and if you're not, then you definitely should see someone to prepare them, especially this year.
Yes.
And maybe going forward, you'll get comfortable enough with it that you won't have to.
Right, and hopefully they won't change it for at least
5
a
minutes.
couple of years, because, you know, we all have to get used to it. The other thing I want to caution is, if you owe money, do not put your head in the sand. There is a form, it's called 9465. TurboTax has it, H&R Block has it, Liberty Tax has it, every tax preparer in the country has it, okay? It is an installment agreement to make monthly payments. If you can't pay your bill, and your bill cannot be paid in 4 months by you, because this installment agreement costs money. But say you owe $400 and you don't have it right now, but you're going to work overtime next month and you'll have half of it. What you do is you send in, say, $50. Don't fill out the form, just send in $50 with your return. They will send you a bill. You pay the $250 that you got, that leaves $100. They'll send you another bill and you can pay it off. But it has to be done in 4 months. So if you file your return in April and you owe money, you have May, June, July, and August. If your bill is so high you can't pay it in 4 months, you use that installment agreement. They will charge you interest. You fill it out when you do your return. They will send you a bill every month. Don't wait until you get the registered letter that tells you they're going to take it out of your paycheck. Because
you don't want to
when
get
you
in that
come
situation.
see me with that, you're going to have to pay me to fix it. And that if the installment agreement is done with your return, no charge. Can you pay the bill? No, I can't pay it. Can you pay it in 4 months? Absolutely no way. Okay, we're going to do this. How much a month can you pay? They have a chart. It is, they'll give you longer to pay it than you want to take. And so therefore, you tell me or any other preparer, I can pay $100 a month. You owe $1,000. It'll be paid off in 10 months, 11 months with a little bit of interest. And we send it in, no charge. They'll send you a form letter saying, hi, we love you. Please send us $100 a month.
Well, I think most people are aware of that, certainly. And if not, then they do need to speak to someone.
Yes,
if they come up with an amount that they can't deal with,
Right.
then they definitely do need to speak to someone.
Please do, because it is a lot easier to nip it in the bud than to deal with representation. Representation costs you a lot of money. I have 3 representation cases on my desk right now.
Oh my.
And
Just hate to hear that.
And it was all things that went awry that should have been solved the first year, and it went on for 2 or 3 years. So now
that's what I've heard before too. They don't want to deal with it, and obviously it's just part of life. Death and taxes, and I loved how you put there's 3 things
you get
I can guarantee you.
Form letters that come in the mail. I mean, a lot of them are just, and sometimes it's a mistake. You know, I had a gentleman, he told me he paid estimated taxes at this dollar amount. Come to find out, he had added things twice. He'd been my client for 20 years. I never asked him for copies of the checks to prove it.
You assume that what he's telling you.
Because it was the same as what I had told him to pay.
Oh, okay.
He forgot to pay one of them. So he got a letter saying, we think you're off by this much money. So he called me up. We fixed it. didn't charge him a penalty. He sent the check in. It was all done in a day.
And that's what we want.
Yes. If he had waited or thrown away the letter and then got a letter in 60 days, he would have been charged a couple $100 penalty and still had to pay the tax because he made the mistake.
Yeah. Let me just ask you something about that, though. I know a lot of people are very paranoid about scams and different things.
Yes.
The government is never just going to put a letter in the mail and say, send me, $7,000 or whatever
first
that
of all,
amount is.
IRS only mails you letters. IRS
Won't call you on the
does not
phone.
call you on the phone. They won't call you on the phone if you're going through an audit and you have a preparer helping you. They will only call the preparer. They will not call you. They do not send you emails. They do not send me emails.
That's very,
Emails
very,
are
very good to know.
verboten, okay? If I have to furnish information to IRS on an audit, I have to fax it or mail it registered mail,
Okay.
okay?
So just be on the lookout for
and
that. If anyone-
IRS does not want iTunes cards. They do not want cash advance debit cards. They don't want
need that.
any of that.
No, they do not.
So if you get a phone call and says, this is the IRS, ask the person for their name. If you have a phone that is telling you the phone number, write it down. Call your preparer or go and Google IRS complaints, IRS scams. They will give you an 800 number to call. They actually do record every one of those. When they see a pattern, they send out the guys that wear guns and they go and find the person.
Please, if that does happen to you, if it should happen to anyone,
Yes.
please take care of it that way, because there might be someone else that has not, is not aware of that. And someone calls, I know they can be very intimidating.
Yes.
I had someone call the other day, which, everyone gets these prank
Yes.
calls or the scam calls, and they said, do not hang up. And
yes.
it was in this. It did startle me, and obviously they've got the thing where if it's not a number I recognize, I just hit delete, decline, and I don't even take the call. And I think obviously they're trying to work around that.
They are working around it today. Of course, my office phone is all over the internet,
Of course,
all over.
as our
Nelson
business
County,
numbers, sure,
everywhere.
sure.
I got 7 robocalls this morning between 8 a.m. and noontime. 7 on my office phone and 4 on my cell phone. And my cell phone is not on the internet, but my cell phone is on my message. And they're calling, you don't answer. Some of them are listening to the message, taking that number and calling. And a lot of times if you call back, I called a number today back just to see, because it was a 348 number.
Oh, they've
It
got
said unknown, so I dialed it back.
Right.
That number was not in service.
They have said that before. If it's a Bardstown number, I think folks are the 502 area.
Right.
They've got that down. If it's a or 270 or whatever their local number, and they've even got past that. And
Yes.
you see the 348, and you think, well, it's someone is calling, someone a friend or someone.
And I had a client
Sure.
that was on a payment plan, and he got a phone call at work that he hadn't made his payment yet for the month. And he went across the street to Walgreens and got an iTunes card. And then it was a Saturday, and then he called me. I said, what I said I can't put on TV. And he said, can I stop it? I said, well, if it was Thursday, you could call your credit union and tell them not to honor the withdrawal to buy the iTunes cards. But it's Saturday afternoon.
And that's why they've done it.
And the bank is closed.
That's why they've done
and
that.
he lost $300. They never, even if you are delinquent in an installment agreement, you will not get a phone call. They will send you a letter, a form letter saying, by the way, you did not make your payment, and if you don't make it by this date, we're going to cancel your installment agreement. And it is computerized. Every letter from IRS is computerized. It is never signed by someone with a blue ink pen. Ever, ever, ever.
Well, and if they have questions,
Even if you're being audited and you get the audit report that says there is no change, you're a nice person, it's a stamped signature. So anytime, if you take it to any tax preparer, if you think it's real and it's not, they can tell you in 30 seconds. We look at them all the time.
Right. So just everyone, please be aware of that, because there are a lot of scams and things that going on out there. Or if someone comes to you with a question that you don't know, feel free to call either that IRS number. There is a number that you can call.
1-800-829-1040.
All right. Well, 1040. That ought to be easy to remember.
Right.
Easier to remember.
That is their general line.
Okay.
And if you listen to the 9 descriptions, you can punch the button for the problem you have.
Okay.
And if you get a letter in the mail, in the upper right-hand corner will be the phone number. And if it's not that phone number, you're either way beyond general, and you probably have someone helping you. But any letter that comes the first time, or saying, we think you made a mistake, you said you owed $700, we think you owe $740, we took away something, please send us $40 or whatever, that number will be in the upper right-hand corner.
Okay. Well, we just hope that this was helpful to you
Yes.
today. I know Martha has spoken many times to different groups that I have been with, and I know every time I go back with another little, like this to share with my friends with the charitable giving.
Please do.
It just things like that. It's so much easier to ask and do the right thing first,
Yes.
rather than come back and try to correct it later. So we hope this has been helpful to you today, and I want to thank you, Miss Martha, for joining us and giving
for
us
having
all
me.
this information, because we really do appreciate it.
You're welcome.
And if they have any questions, just give us a call. Thank you.
Yes, thanks.